Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am thrilled that you're here. And I know you're going to get tremendous value from the nice gentleman I'm interviewing today. His name is Nima Equity, and he's a critical care and pulmonary medical physician. And he's springboarded that into a multifamily career and single family as well, a small single family portfolio. But he's in over 1,000 doors as a general partner in the Dallas-Fort Worth area. And we're going to have a lot of fun today. Welcome to the show, Harry.
Hey, Rod. Yeah, thank you so much. I'm very honored to be here today with you.
Oh, it's kind of you to say that. Thank you. So, why don't you give us a little background, to come from a very high paying, medical career be doing this. And maybe are you still a practicing physician? You're still doing both?
Yeah, that's correct. Yeah, I'm still full-time pulmonary and critical care doctor here in the Dallas-Fort Worth area.
Wow. And to do that, and you've got kids, I know you've got two boys, and to build this portfolio on the side, very impressive, brother. So give us a little of your background, if you would.
Yes, absolutely. So, just to get started, so my wife and I, we both are physicians, actually. We're from South America, from Peru. We came here after we finished medical school. That was about 15, 16 years ago. And because of the nature of medicine, you need to continue your training after you finish your medical school. You need to do more years of residency, subspecialization, like fellowship and all of that, right? But as we also came like in a visa, like most foreign physician comes, so we needed to do some extra years, kind of helping the community, right? Like in other areas, right? It has been a long journey, right? And in part because of that, and also because of the nature of moving every 3 to 5 years from place to place because of the training, we couldn't get started actually in real estate until about 5 or 6 years ago when we moved here to Dallas-Fort Worth, right? So it has been a long journey, in terms of medicine, which again, by the way, we still love medicine. And I mean, as you know, I still full-time practice doctor, right? We have other interests in life, and we were very passionate about real estate. And as you said, we were in both in commercial and also in residential real estate. So that's how we started.
So where did that desire for, medicine, becoming a doctor is not an easy thing, and takes a lot of effort, a lot of passion, a lot of work. And then to shift gears is a big deal. Where did that desire to move from what you both love, which is medicine, to real estate, where did that come from? Was there someone in your past? Was there?
Yeah.
Talk about that.
Yes. So, and also it takes a lot of time, right? So because if you can imagine, the medical school, with college is about 5 to 6 years plus residency specialization, another 5 to 6 years. So you're talking about your 12 years,
right?
Right. So, I could say all this entrepreneurial or doing things outside medicine, it comes from our families, right? So again, as I was telling you a little bit more in detail, so we're from South America. We're very blessed and grateful that we're first generation in our family that was able to go to college. Actually, my mom and dad, they weren't able to do that. So they needed to work very hard, in general, in doing different things and business and things like that. And one of them, so my mom, she owned real estate, and she still owns real estate back in my country. Of course, that's very different than owning real estate in the United States, right? You can imagine, in a third world country. The rules are completely different. The lending space is way different. But so I got all that drive, all that interest in entrepreneurial things from family.
Oh, that's fantastic. It's interesting. I got into real estate for the same reason. My mom bought the house across the street, and unfortunately it caught me before college. So I never went to college. I said, I told her, you made $20,000 on this house and you didn't do anything. And this was when $20,000 was a lot of money. I was like, forget it. I'm going to do real estate. So that I've done it my whole life. So you started in single family, I assume, just like everybody else does. Right.
Yes.
And then, you decided to move into multifamily. You found a local mentor, guy we both know and like, and we'll talk about that for a minute. How do you feel about the significance and value of having a coach or a mentor to help you in this journey, and having like an ecosystem? Because I know, like I say, he's a buddy of mine, and he has an ecosystem. Talk about the why you did that.
Absolutely, and having a mentor, either a paid mentor or a non-paid mentor, is huge. It's very important.
Right.
Either you do that in single family homes or you're doing commercial real estate, right? Like, and in single and the stakes are way higher, right? Like, so as you can imagine, like, right? Like in single family homes, it's your own money, and you can do right or wrong, and you commit your mistakes, and that can be painful. But in commercial real estate, we're talking about like millions and millions of dollars, and the most important thing, we're not just talking about your own money, but we're also talking about your investors' money,
sure,
right? Like, so that's why it's one of the things that drove me like to the decision, like to get a mentor, right? Like,
and help, yeah.
When I was starting, actually, I was doing my own due diligence and my education, right? Like, and I was going to different meetups and conferences, right? Like, and I got to talk with someone, and he kind of explained to me, right? Like, so if you want to go to commercial real estate and do these bigger deals and these bigger properties, you need one of three things, right? So either you have a lot of time, or you have a good network, or you have a little bit of capital and you can invest in yourself, right? Like, so as you can imagine, right, like a full-time doctor with two very active kids, I mean, it was going to be very difficult to do everything on my own, right? Like, so that's why I decided like to invest in myself, and that's something that I usually recommend, like anyone who wants to get started, like in commercial real estate, to do this, right? Like to do the due diligence and to look for a mentor they can rely on. And also, as important as the education it can be, the network of that mentor, of the network of those persons who have been for a long, long time in the game, is invaluable.
Yeah, no, and guys, this isn't a massive plug for my Warrior program, but I don't care if you come to me or you go to a mentor, somebody else, but get help. Okay, this business has enough complexity that there are people that have done it on their own, but they're not, it's just going to take a lot longer. And you've built up a portfolio of over 1,000 doors in less than 5 years, which, with everything else you've got going on, is pretty freaking, impressive, honestly. And you talked about network, and I know that our friend Mark has a great network, and as do I. I will tell you, I think my students own upwards of 150,000 doors now, and I've only been teaching 5 years, and most of those are done between warriors. That's what we call my coaching students, are warriors, and it's just an extraordinary environment. In fact, it's funny that we're having this right now. This Wednesday, Saturday, I've got 300 of my warriors coming to Sarasota here. We're preparing for a warrior only event where we go deep dives on underwriting and the main reason we did it was to facilitate those connections. So that people, because a lot of people are very shy, and so I forced them to get up and meet each other, because it's been proven to be so successful. Now, I know now in your team, because we know this is a team sport, that you focus a lot on raising capital. So I'd love to talk about raising capital, because honestly, in this environment, people are becoming afraid. It could be an ugly recession. A lot of people are saying it's going to be. Some people are saying it's not, but a lot of people are saying it will be. And so, whether they're right or wrong, there's going to definitely be some fallout, particularly in the bridge debt space, for sure. We're already seeing that. But let's talk about raising capital. Let's talk about what it takes to go out there and raise money for a deal. So can you maybe talk about some of the strategy around that? Because I think raising the money is going to be harder than finding the deals over the next couple of years. So, so go ahead and speak to that, because that's a really, in fact, I just finished a book on raising capital. I got the rough draft literally today, and awesome. I'm spending a couple hours this weekend on it because the students have been asking for it. So I don't talk about it enough on the show. So I'll stop babbling, and please, let's talk about it.
Yeah, no, I mean, it's a process, right? Yeah. Like, it's a process in change of how you approach people, in change even on your mindset, right? Like because what happens with many people sorry, who is starting like in this business and in the capital raising and in the private equity, is that they initially start this with the wrong mindset, right? Like, so I'm pitching out something, I'm gonna try like to get the money from my investors, something like that, right? Like it takes a couple of it takes
so you're
time.
saying they'll jump right in and say, hey, come invest in this deal. They're getting the cart before the horse is what I'm hearing,
Yes.
correct?
Yes.
Okay. When you say mindset, you don't go at it like too aggressively. You build a relationship. Is that
Yes.
what? Okay, got it.
Exactly.
Okay.
Yeah, and that start from the beginning, right? Like, and sometimes what you need to get started initially is in providing value and also education to your friends and to your possible investors, right? Like, there's one very important thing that people tend to invest or tend to do things in things that they are familiar with or things that they understand. And guess what? What's the most easy way to invest in the United States? In stocks or funds, or mutual funds or REITs, right? Like, but they don't have the education that they can do so much more outside that, right? And just not necessarily in real estate. There are other ways like that you can invest, like in ATMs, in energy, carbon capture, and different things, right? Like, so that's the first step, right? Like, to give your friends or your possible investors value, right? Like value and education.
Let's elaborate on that for a minute. Sorry I interrupted, but that you hit on probably the most important piece. Now, we also happen to live in the greatest time on earth from a connection standpoint with social media. I mean, my podcast is at 16 million downloads. I've got a Facebook group with 50,000 people in it. And so there's all these vehicles to start creating some reach and adding value. But what you just said, I just did a course on social media, and one of the biggest things I hammered home on that is there's two pieces to this. One is you add value. That's the number one piece. The second piece is you're consistent. So if you're communicating with people and you're educating them, and you're consistent, you don't need millions like I have or anything like that. You get a couple hundred people that you've connected with and you've added value to. When you have a deal, then it's so much easier to have that conversation. Would you agree?
Absolutely.
Yeah.
100%.
Now, do you do any social stuff on as far as creating reach, or is it just one-on-one with people in the medical community, or how do you go about starting to build those relationships? Is it through networking events? Talk a little bit about how you create those initial contacts. I know what you do after the fact. I'm sure you're sending emails and all of that, but what do you do initially? How do you get those initial connections?
Yeah, so it has evolved, right? Like, so like initially, as you know, like I was in single family homes and long-term rentals. My friends and family, they knew about like what I was doing. They knew that I was to some degree successful in that space. So the first step is just to get out there and just to communicate and to let other people know what you're doing. Right. Like, so they knew about that. And also they were very aware when I switched to commercial real estate. So that's one of the things, right? Like, I mean, as simple as it sounds, just to let other people know, not being salesy or anything like that, but just to let like other people know what you're doing and how you can provide value. Like the second thing is like, again, like the value and education, right? Like, so in my case, I also have like, I mean, as physicians, as you can understand, we love education and we love to teach. Like I'm actually like a physician in a tertiary center here in Dallas-Fort Worth, where we work with residents, with fellows, with medical students. So we also in real estate, we like to educate people. So we also have our YouTube channel, like in my company.
Fantastic.
Right? Like, so we do some education, like in general, like about like mindset, about real estate in general, and also in syndications.
Fantastic. So there you go. You've harnessed social media and you can do it on YouTube. You can do it on Facebook. You can do a podcast. You can do a meetup group. In fact, that's all there was, years ago. And the people that first started in this business, they would do they call it a real estate investor club meeting, RIA meetings. It was before meetup. And they raised tens of millions of dollars meeting with 30, 40, 50, 100 people, on a monthly basis. And so, That social media has just made it so much easier. And YouTube's an incredible channel. LinkedIn's another one. I just got interviewed today on somebody's LinkedIn channel. So, and something you said about letting people know, I tell my students this: if they hold still long enough, they better darn well know what it is you're doing. You need to do everything you can to get asked the question, what do you do? And then, I'm so glad you asked,
Yes.
and then you respond, right? So you add value. You teach, and I'm sure that you've got some sort of an email nurture campaign where they're getting regular emails. Do you utilize the CRM for that?
Yes, we use Active Campaign for that.
Active Campaign is fantastic. Yes. We use HubSpot. Yes. There's lots of good ones out there, guys. There's Insightly, Zoho, really simple systems. Yes. Yeah, there's lots of good.
There's a lot.
MailChimp, exactly. So lots of options for that. But the reason you use a CRM is it keeps track of everybody, because you're getting in this business. You're making lots of new connections, yes. Potential investors, potential partners, even sellers. And so you've got to track all that and make sure you stay on top of it. So CRM stands for Client Relationship Management Software. And so you do that. Once you've got people that are invested in your deals, do you continue that education? To talk a little bit about that, because like in our case, we do webinars, and I kind of try to show people behind the scenes, open the kimono. Here's what we're doing back here that I can't possibly teach from stage. Do you do any of that with your investors, or let them show up at your assets or anything like that?
Yes, absolutely. So we have like our newsletter, and we send updates every 2 weeks, right? Again, it's kind of like industry standard. Like every time we close a project or a deal, like we buy a project, we send like the information about that. We send like updates every month. We send financial updates every 3 months. Right. We also, in our newsletter, we have a blog where we teach like the different aspects of, again, like how's the process of investing and what happens also after you invest, right? Like, because that's important, right? Like, because no one tells you that, or no one teaches you that. Like in Wall Street, you just put your money there and then you forget about that, right? Like, and you don't know what it's doing or who's working with your money.
And you hope for the best, and you hope for the best. And I will tell you, I just saw an economist. He was a strategist for one of the big, oh God, I've got to find that article. But it was just like within the last week who said that the stock market's expected to decline by 26% this year. Now, that's a fourth of the value. That's some sobering stuff. And people, it's funny, people will give their money to a stockbroker, and what's sad is most of these stockbrokers are just salespeople. They're not analysts. They're not charting the stocks. They're not experts in the stocks. And so in that vein, guys, if you're an accredited investor and you are thinking about investing in an asset, for God's sakes, educate yourself. Come to one of my boot camps. They're ridiculously reasonable. I don't sell anything there. So, but don't give your hard-earned money to someone unless you've evaluated it. Would you agree? At least at a high level, at the very least, would you agree, Harry?
Yes, absolutely. And and also you're saying, there's completely lack of transparency in the stock market comparing to what we do, like the syndications, where again, like, are you able like to talk with the CEO of Apple or like Walmart or Amazon? Absolutely not, right? Like in the case you invest in a syndication or a fund, you're able to speak directly with your operator and ask questions, and he or she is supposed to answer that like in the first 24 or 48 hours.
That's a really good point. Very good point. Yeah. And some investors will come in, they'll start to invest passively, and then they'll take an interest in possibly becoming an operator themselves. I don't know if you've seen that. We see that all the time. And
yes,
and yeah, sure.
Yes. I mean, like, so one of the things that we try to do is, again, like educate, but also give options to people who approach us, right? Like, again, like, as great as syndications are, they're not the only way to invest in real estate, right? So again, like, so there are many people who don't have the time or they don't have interest in real estate, but there are some people who have a little bit more time and they have a passion like you or me in real estate. Mm-hmm. So why not like to bring another member to the like active space in real estate? Absolutely.
Yeah, yeah, love it. Now, so that was capital raising, guys. It's just building relationships and not being salesy and being yourself and being honest and having integrity and communicating and and if you're introverted and you don't love that, you just got to push yourself. You have 5 seconds of courage and say, "Hey, I'm Rod. I don't think we've met." And what I used to do is I used to have a list of questions in my back pocket so I didn't fumble. And this is true story. And I would just push myself to say hi, and then I would just ask questions. And of course, if you're asking questions, you're driving the conversation, number one, anywhere you want. And people think it's the greatest conversation ever because they're doing the most of the talking. It's from Dale Carnegie's book, How to Win Friends and Influence People. You take a genuine interest in them. And that's all it is, guys. Don't overthink it. All right. So that's capital raising. Now, I know you also do some asset management. Let's speak to that for a few minutes. Because, I will tell you, there were a lot of operators that have not been through a downturn. You could fog a mirror these last couple of years and make money in multifamily with the rents going crazy like they've gone. But that's it's all changing right now. And forgetting the debt, rents are flatlining. They're starting to decline. Vacancies are increasing. And right now it's going to be asset management is a big deal. So talk about some of the things you do so I'm assuming you asset manage a property management company, yes?
Yes, absolutely.
Yes. So talk about the communication and the sorts of things that happen inside of that bubble.
Yes. Yeah. No. So I'm 100% agree with you. I mean, like as you're saying, in the last 3 or 4 years, the returns were not sustainable, right? Like, so again, like, or because of the increase of the rents or the compression of the cap rates, it was something that was not going to stay for that long, right? Like, so now, like, again, and we have seen that in many properties that we acquired, right? Like how the prior team or the prior ownership team, like they were not able like to lay out like the business plan, but it's still like because of all of that, they were able like to give the great like returns to the investor. Sure. That's not the case anymore, right? That's not the case anymore. Right. So like now again, like the most important part, as even more important than the underwriting and acquiring the property is the asset management, right? Like so and that can make or break a deal. That can make a great deal to go south or a bad deal to stay afloat or like to go to a good end, right? Like, so yeah, I mean, like so last year I joined like two partners, and we were able like to be the lead sponsors in this asset that we acquired last year around August in Dallas Forward. So it's a one of 500 units here in Dallas Forward, like a Class C property, right? Like, and we have seen actually firsthand how important, how valuable, how key is to do the asset management in this property, right? Like, and it's not an easy task. It's very difficult, like because you now need to implement all this business plan, right? Like, so you need now like to stay on top of your property management company, and we all know that the property management space is a very tough space, right? Like they don't necessarily get the best.
And there are a lot of people. There are a lot of people in that space that really aren't that great as well. And I will tell you, I'm sure you've probably already realized this. It's less about the property management company and more about the people that they get on site to work the property. If you get a good manager, even with a bad company, you're likely okay. But if the reverse is the case, you've got a great company and they bring in the wrong manager, you can have problems. So talk about some of the things. How often are you meeting with that on-site team on that particular asset?
Yes. So yeah, we have weekly meetings with the team,
Mm-hmm.
but also as I'm local in this market and I'm like the boots on the ground on my team, I go every single week to the property. And like I know that's not a must or like a need, but I feel that this is very important in this environment, right? Like you don't want to delay things a week or 2 weeks or 3 weeks because then it impacts tremendously like the NOI or net operating income, right? Like, so when you have a vacancy or 2 vacancies, you say like, oh, maybe not going to affect that much. But if in the next week you have another 2, and then that's affecting your income. Right. So that's super important.
And then you have to find out why, and you might walk the property and see trash and things that aren't being taken care of and so on and so forth. And that's an issue. Now, do you, what KPIs do you monitor on a weekly basis with your property management team? Can you speak to that? Now, these are key performance indicators or metrics. These are things that you measure and keep track of on a regular basis. What
Yes.
do you watch?
Yes.
Harry?
So we watch like for the occupancy, for the lease and sign, for the traffic, for the work orders, right? Like for the people
So
who
on the
is-
work orders, guys, you want to see how many are open and how long they take to fix, because if they're not taking care of these people, they're going to move, right?
Yes.
They need to be taken care of.
That's one of the most important things, actually. Like,
Right.
again, like they are not going to stay in your property. And again, like it just takes a couple of months until you start seeing that turn around very, very quickly if you have like a good service in where they live.
Yeah, and they need to be following up and asking them if they're happy with what they did, and that's one of the biggest issues, because I'm going to tell you, your biggest expense in multifamily is turnover, and you want to do everything you possibly can to lower your turnover, because you lose rent, you lose the fix up, the make ready, all of that costs a tremendous amount of money and directly impacts your bottom line. So you're watching lease ups, you're watching traffic. Now, on the traffic, guys, you've got to look for any breakdowns in the system. Like, for example, how many leads are coming in from the computer? What's the response time on those leads? How many of those leads are converting to a visit to the property or an application? Then how many of those applications become leases? And you look for breakdowns in any piece of that system.
Absolutely. Yeah. And like on that point, on that, you will decide which one of those are working or not, and on which one of those you may not need to put like your money anymore, or you may want to double down in another source, right? That's very important.
Yep. And so you're checking work orders, renewals as well. Yes, you've got them all working on renewals. If you've got a lease expiring, you want to be 2 or 3 months out working those lease expirations to renew them into another year lease, and of course do a bump if you can. Let's see, what else do we monitor?
So we also follow the delinquency, also the capex, which many units are being like under renovation and they're like ready to, and also our draws and our reimbursements with the lender, right? Like which also is very important, especially in this moment where capital is so scarce.
Yes. Okay. Yeah. So these are all things, guys, people think they buy a property and they give it to a property management company and they can raise their hands and my work here is done. No, you're just getting started. In fact, when we put together a syndication deal and we carve up the pieces, the biggest piece is the asset management, because it goes on for 5 years, and Absolutely. So, that's the biggest chunk out of the deal. But, well, listen, I know you name your company is Nima Equity. I really appreciate you coming on, adding some value today, Harry. It's a pleasure to meet you. And I'm in Dallas. We've got several assets in Dallas, actually, and we love that market, and definitely want to buy more. So maybe our paths will cross again one day, my friend.
I hope so. Yeah. And actually, I know a couple of your warriors from here, from Dallas Forward. Like they
do you really?
So his name is David Turner and Liz Thomas.
Sure.
And they're great guys. And in the last 2 years, I've also seen how they have grown in your program. So it's awesome.
Thank you. I appreciate that. Well, listen, it's great to meet you, and we'll definitely stay connected. Thanks, Harry.
Awesome. Thank you so much. Thank you, guys.
So one other quick thing: we encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more, in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.